Welcome back. The market is in the red yet again. It's been that kind of a day, and the mid-cap index is now actually underperforming, which was always expected if the market declined or had a second round of decline. In terms of stocks leading the decline purely in this hour of trade, pull out the intraday chart of Hindalco, and that one has seen a big intraday decline. Quite interesting. 2.5% lower now on Hindalco, and then of course you have Tata Steel as well, which is lower. ICICI Bank is actually now okay. We have an alert now. ICICI Bank numbers to be out shortly, so we are expecting ICICI Bank's numbers. Initially it was expected to be after the market hours, but now we know that these numbers would be out pretty soon. Mayuresh Joshi of Angel Broking is also with us. We will also have Lata in studio, of course, to decode the ICICI Bank's numbers once they're out. But Mayuresh, good morning. First, a word on ICICI Bank itself. How would you approach it ahead of numbers?
Morning, Anuj. If one really goes by what the management commentary was last quarter, the slippage is still expected to be on the higher side. The provisioning was always expected to be higher with the kind of asset recognition that has taken place and which is expected to take place as well in Q4. So largely, I think building in the same amount of slippages, 6,300, 6,400 odd crores. You're probably looking at the gross NPAs and the net NPAs inching upwards, the credit cost remaining elevated. And again, I think even on the 525 and the SDR, the management did that they will see some amount of stress even on those accounts. So I think weak set of numbers expected, but probably in line with expectations that the analysts are expecting. Some contraction also expected on NIMs. But largely I think if the bank is able to outperform, that will give a fillip to the stock and the bank index yet.
Okay, well, the stock is a little choppy ahead of its numbers. Remember that it's already corrected around 5 to 6 odd % post the Axis Bank numbers that were out on Tuesday evening. So from Wednesday itself, that stock is corrected over around 5 to 6 odd %. But Mayuresh, taking into context the Axis Bank disclosures about stressed asset quality, how would you approach Axis versus ICICI?
I think the disclosures were quite good, in the sense that it has actually given a kind of an outer limit in terms of how much slippages can actually take place over the next couple of years. If you break that down over the next 8 quarters and you try to adjust the expected cash flows to come through, even with elevated credit costs of 125 to 150 bips for Axis, I think the bank is probably in a much better position now in terms of how the expected numbers can be panned out. However, I think in terms of ICICI Bank, I think one really not sure in terms of the corporate exposure and what kind of hit the bank will take. Though I think if a similar transparency is probably disclosed by ICICI Bank, my own take is that even if you built in higher credit costs, even if you built in higher slippages, at least for the better part of the next fiscal year, you're probably looking at the latter half of FY17 and FY18 appearing to be much better with asset quality expected to bottom out. So earnings growth can be much higher with the kind of branch network that they've got, and that operating leverage will clearly be seen on their return ratios.
Okay. Mayuresh, the other stock that I actually want to focus on, which is not ICICI Bank, is HCL Tech. That stock is at a fresh 52-week low. It's lost over 10 odd % post numbers. How are you approaching it?
No, disappointing, Ekta, and again, as I discussed yesterday, I think the dollar revenue is less than what the street was expecting. If you look at the cross-currency growth, much lesser than what their peers have done. But if you look at the management commentary and if you look at the management intent, that this next fiscal is probably going to be much stronger, and if you probably assume EBIT margins between 21 and 22%, I think the growth can be much stronger in terms of the earnings delivery that the company can actually give. It's got a very strong order book. If you look across the business verticals, apart from application development, the infrastructure management service and engineering is actually doing pretty well. So I think the engineering segment has better margins, and if that grows at a faster clip with the kind of TCV wins that we've seen, I think that will give a fillip in terms of how earnings will pan out in the coming years. So my take is that yes, I think the numbers were disappointing in terms of how the dollar revenue growth has happened, but going forward, again, in dollar terms as well as rupee terms, even in currency terms, it should do pretty better or pretty reasonable over the next few quarters. So valuations have become extremely reasonable after the corrections that we've seen. So any investor who's having a long-term view, he buys this stock in a staggered manner. I remain extremely optimistic on HCL Tech over the next couple of years.
Okay. Actually, the market's mind is absolutely preoccupied by the ICICI Bank numbers that are expected shortly. These numbers were to be announced after market hours, but they have been advanced because of too much of rumor mongering, I would assume, or for whatever reason. Actually, Ekta, it would make more sense perhaps if you just alerted us
Yeah.
with your very helpful table to the numbers we should be watching out for. You told us NII is going to be up 9.6% to 5565 crore and profit up 6.6% to 3115 crore, but those will not be the more important numbers.
The more important numbers will be the asset quality, because last quarter they had reported slippages of 6,540 odd crores, and that included the asset quality review which was mandated by the RBI, and within that the slippages from the AQR were maybe around 4,000 odd crores, and they said that 50% was recognized in terms of AQR in Q3 and another 50% should be recognized in this quarter. From the restructured assets there were slippages of around 1350 crores. 525 last quarter, which was incurred by them, was around 450 crores. 525 pipeline as guided by the management was 700 crores. Strategic debt restructuring last quarter was around 1670 crores, and the SDR pipeline which was guided by them was around 1200 crores. Remember that one of the key statements from the management last quarter is that the pain will not recede in FY. It's unlikely to recede in FY17. So the street is working with as bad an asset quality number as they saw in Q3 for Q4. So that's when Lata, the management commentary becomes key, that when exactly in FY17 are they going to see some sort of respite in terms of the pain. Remember that ICICI Bank is around 4.5% exposure to the steel sector itself, and 80% of it is still standard, with 13% which is NPA, and the remaining part of it is already SDR as well as 525. So that will be important to watch out for. Remember that just a couple of weeks ago we reported that Bhushan Steel, or reports indicated that Bhushan Steel has in fact become an NPA. So whether they've treated this as an NPA this quarter, and what maybe the guidance would be on the Bhushan Steel and other accounts would be important to watch out for. In terms of other parameters, Lata,
what is their exposure to corporate book, and did they declare how much is exposed to the top 10 indebted groups? We had those numbers for Axis, that their total corporate book is 60% and 59 if you please, as well that their exposure to the top 10 indebted groups is 8%. Those numbers were known. Do we have any working numbers for ICICI?
Well, no working numbers, because we don't have working numbers on that front. But I think a couple of analysts that I spoke to, that after the Axis Bank disclosures that have come out in terms of the watch list, they are hoping that they can expect some similar kind of disclosures from ICICI Bank as well. So that will be, again, the commentary will be key to watch out for in terms of how much pain is in fact left in FY17 for ICICI Bank. In terms of other parameters, it should be okay. Remember, last quarter advances growth was around 16% with around a 24% growth in terms of retail advances. So we could expect maybe that kind of trend to continue, possibly lesser than what we had seen last quarter because of the asset quality stress.
Also keep in mind, if you pull out a 1 month chart of ICICI Bank, while a stock rallied, towards the end it's slipped a bit. I mean, if you compare say an ICICI Bank and an Axis Bank, Axis has been a better performer. I mean, you know, from on month to date point of view, look at that 1 month chart. Axis Bank is up about 12% or thereabout, while Axis Bank is not really doing, or ICICI Bank has not done that well, Lata. So my sense is that if ICICI Bank has to surprise positively on any parameter, there's scope for ICICI Bank to maybe rally a bit, because it's over the last 2-3 days, especially since Axis's numbers, it's come down a bit, as that's the overall chart. But yeah, let's watch out for the numbers. It's going to be extremely crucial.
Yeah, I just want to ask Mayuresh the same question I asked Ekta. Would you have any idea about ICICI's exposure to the top 10 indebted groups? You know, if they were to do an Axis-like disclosure, what would that number be? You know, that 22,000 crore watch list, what may be your watch list on ICICI?
Not really working with a number on that front, but if the bank proactively does come out, I think it makes life easier in terms of what actually can go bad over the next few quarters. So I think that gives some amount of outer lining in terms of how bad the book can basically go in terms of the corporate exposure. Unfortunately, I don't have numbers, because I think Axis Bank was very, very clear in terms of the 8% funded exposure to high leverage groups. I'm not really sure about the number that ICICI Bank has got.
Yeah, actually, yesterday I was speaking to the ex-RBI ED in the Edelweiss conclave, and he was, in a public statement, he said that what we know about stress and pain is what was mandatorily asked by the RBI to be declared, and those were the top, 100, 120, 150 accounts. There is a list below that, and we do not know if all that pain has been recognized. In the years 2009, immediately after the Lehman crisis, banks did one-time restructuring one-on-one, unilaterally, not with the consortium. And those perhaps the moratorium period is over and some of that pain will show up. We don't know. So we have to, it's not to scare the market, but merely to point out that there could be pockets of distress which are not yet revealed. So we have to be prepared for all that. At the moment the market has retained its nerve. It is in the green, Anuj. You'll have to say it's not been one bad day. It's only punished selectively.
Okay. Well, I just want to pull up the JSPL stock as well, because there is an important clarification which is in fact sent in from Ashmit, where he says, quote unquote, framing of charges is unimportant but a procedural development. This marks the beginning of a trial. We will now see full-fledged arguments, and after the arguments are concluded, the special coal scam court will decide on convicting or exonerating the parties. So no jail for anyone after today's order. So important clarification which is coming in for JSPL, that yes, it is framing of charges, after which this marks the beginning of the trial. So there is no jail for anyone. There is no sort of development, dynamic development which is happening today to the likes of Naveen Jindal and the others involved. So the stock in fact recovering a tad bit as we speak. That stock is still down, however, because of the sentiment negative that it's facing. In fact, Mayuresh, just come in on the news on JSPL and what you have made of it.
So no rating on the stock per se, but with such developments taking place, the issues of corporate governance come to the forefront. Secondly, I think if you look at the overhang that the legal process will create and keep getting created, I think that creates an overhang onto the stock. So though financial implications are not there in my opinion in terms of the mine, I think the over leverage of the balance sheet that JSPL has got obviously is impacting its cash flows. What happens with its asset sale, I think it will be very important to see whether it can get premium valuations for the same as well. So at this point of time, I think the overhang on the stock might continue, but again, no rating on the stock at this point of time.
Okay, well, the ICICI Bank number should be out any moment, but we are discussing these numbers at length because this number is going to be extremely important, and not just for the Bank Nifty but for the Nifty as well. A lot of people believe it might well decide the second half of market, or for the second half of earnings season. It might just set the tone for that, and that's why we are discussing these numbers at length. Well, Mayuresh, finally then, before we let you go, outside of ICICI Bank and couple of other names, what else stands out for you in the earnings season from whatever we have seen so far?
No, a few of the mid-cap IT companies did well. So again, I think the niche performance there in their core operating areas will be very interesting to watch out for. Within the real estate space, Mahindra Life Spaces, in my opinion, has delivered a good set of numbers, and the kind of execution and sales process that the company follows, faster inventory, revenue recognition is much faster, the cash flows can be much better for the company going ahead. Again, I think it's sitting on a reasonable amount of land bank area, which means that the earnings growth can be much faster for a company like Mahindra Life Spaces. With the new development tools coming from the FSI front, I think that will be a key beneficiary impact for the stock as well.
Alright, let's do one thing. We'll take a break and come back. Of course, if ICICI Bank numbers are out, then we'll cut the break.